Good day, traders. How are you today and how is everything? I believe we have been studying the Elliott Wave Theory course that we'll be uploading to this channel. We've done part 1, part 2, part 3, part 4. Part 4, we were able to conveniently cover all the corrective structures. Okay, so today I want to bring you the indicators, the special indicators that I use to confirm my Elliott wave structure. Okay, when I recognize a corrective structure, how will I know that that corrective structure will not transform to another one? All right. So how do you know? Some of these things you cannot just know by just looking at the structures alone. You need some special indicators to help you, to guide you, and you don't rely on those indicators alone. You must use them as a guide. Remember, I told you in the course of our lectures of the Elliott Wave Theory course that every technical analysis, including Elliott Wave Theory, are very, very subjective in nature. All right, you can give the same structure to 3 analysts and they can give you 3 different results. That shows the level of subjectivity in technical analysis. All right, but if you have some other methodology or other guidelines that seems to agree with the Elliott wave structure, then you have added a bit of objectivity to your analysis. You have made your analysis a bit more reliable. So what I do is to look at the structure. Once I've seen the structure that is forming, and I can confirm that this structure is in accordance with the guidelines, the rules and guidelines for the formation of that pattern based on Elliott wave theory, and I'll look at my indicator to interpret what the indicator is talking about, whether the indicator is in agreement with what the technical chart is giving. So you now discover that at the end of the day, I'm going to be having like 3 forms of analysis together. Number 1, I'm first and foremost going to look at fundamental analysis. Okay, guys, I'm going to look at fundamental analysis to see the overall direction, whether up or down. All right. Number 2, I'm going to see the technical analysis. If the market is to go down based on fundamental, I want to see, the agreement on technical for it to go down. All right. And after I'm through with technical to go down, I must see impulse and correction. And this correction for me, to know that this correction is over, what type of correction is this? I must have confirmation with an indicator. I must have confirmation. So what indicators do I use? I use the 2 indicators called stochastic and stochastic RSI, guys. These are the 2 indicators, stochastic and stochastic RSI. If you don't know how to, install them, just go to indicators here. You click on indicator. All right, here you write stochastic. You see stochastic RSI here, and you see stochastic here. Okay, so you just leave the setting as they are. Just leave them as default setting. All right. So now what I'm going to be doing is to be looking at structures. I'll be looking at structures. I'll be looking at corrective structures, and I'll be interpreting those corrective structures based on indicators, based on their confirmations with the indicators. When we're discussing structural transformation of a flat corrective structure, we did say that some flat corrective structure can transform to another one. That if you have an impulse here, you have 1, 2, and 3. This is a running flat, then upside. Okay, we are saying that this running flat can transform itself to 1, 2, and 3 can transform itself to an expanding flat before it moves. All right. How do we know that this particular running flat is not going to, transform itself at this moment? Indicators will tell us that this transformation will not take place. Okay, those are the things I want to let you know. Then you have another structure that can transform, which we call a contracting flat. This, this, and this. Okay, before you have a move to the upside. This can transform to what is called a regular flat. Impulse 1, 2, and 3 can come down to as a regular flat before you make a move to the upside. What are you going to see in the indicator that will make you to see that this is not going to transform or this will transform? That is the essence of using an indicator to confirm our structure. Now, another thing I want you to know that's very important is that, or before we go there, let's look at those indicators and let's explain them one after the other. The first one is RSI. RSI, the full meaning of RSI is Relative Strength Index. Relative Strength Index. This does not measure overbought and oversold in the structure. No, it does not measure overbought and oversold. It rather measure the strength of the move. If a market is moving to the upside like this, for instance, this is a push to the upside. Okay, if you come to the RSI, you are going to see that the RSI is going to break above 50. Okay, it's going to break above 50. What does it tell you? It means that the move to the upside is very strong. That is why this RSI has broken above 50. Look at the 50 here, at the middle here, right? Really quick, look at it. Check it here, that's 50. So anytime this RSI is above 50, it means that the move to the upside is very strong. That's number one thing you must know. And anytime the move to the downside is very strong, like this one, all right, like this move right here, guys. Can you see move to the downside very strong? You are going to see RSI is going to go below 50. Can you see right from this point, guys? RSI has gone below 50. It means that the market is totally bearish. So without even looking at the market, without looking at the chart, if you show me an indicator at this level, I will tell you whether this market is bearish or bullish. Do you see that there is no chart here? Right here, guys. Right here. Let me show you. No chart. Okay. But but the market is at this level. If the market is to be at this level, without seeing any chart here, guys, I will tell you that this market is bearish. Why do I say this market is bearish? Because RSI is below 50. Okay, this market is bearish. Okay, it's below 50. If it is above 50, then it is bullish. Do you understand now? Okay, so now let's bring out the market. Let's bring the market to that point. Now see what I'm talking about, guys. Can you see? Now, I really hid this from you. All right, I hid it from you. I didn't let you see it. Now let me bring out the indicator. Can you see? What is this market doing? This is a bearish market. Can you see? It's a bearish market. I did not show you the chart, but I show you on the RSI and I confirm to you that this is a bearish market. And truly, you have seen it from here that this is a bearish market because the RSI has indicated it. Okay, so you have known, and if RSI is squeezing around 50, it's a sign of consolidation, guys. It's a sign that the market is consolidating. Let me show you an example real quick, guys. Let me show you an example. Do you notice this? All right, do you notice this? If you come, this is consolidation, all right? If you come to RSI, you are going to see consolidation here. So anytime market is, RSI is showing consolidation at the middle, This is a true definition of what is called fair value. All right. If you don't want to call it fair value, we call it equilibrium price in the market. Equilibrium price in the market is the price at which both supplier and demand, both supply and demand, they agree on a price range. That is equilibrium. And when market is at equilibrium, the strength of the RSI is at average. What do you mean by average? Average is 50. Can you see? RSI begins to consolidate at 50. So never trade when RSI is consolidating at 50, because if you do that, you are trading at fair value. Do you understand? What do you notice here, guys? Do you notice that at this point in time, when this market break out of the fair value, can you see the RSI broke down? So any pullback is your trade. Can you see? RSI is no longer at average. It is below 50. All right, at this stage. So that's how to use RSI, you know, or that is how we use RSI. I will tell you how we use it too in terms of divergence, which we have treated before in terms of divergence. Let me show you something real quick, guys. If a move is coming this way, you have a lower high, you have a lower low. All right. What confirms that you are going to have a sell opportunity at this level? It's not only a retracement to 50 to 61.8% of this impulse. This impulse here. Real quick, guys. Let me show you. This is 50 to 61.8. It is not only this 50 to 61.8 that gives you a confirmation of this continuation move from here to the downside. No, another confirmation you can get, you can see it in RSI, okay? Because if you have the lower low here, all right, when you come to the RSI, guys, to your indicator, I come to the RSI, you're going to see a higher high. Can you see? This is what is called hidden bearish divergence. If you don't understand what hidden bearish divergence means, refer to my video on divergence trading strategy. You are going to see it there. So when you see this, apart from this one coming to 61.8, that's first confirmation. You look at this one, you see the market is making a higher high on the indicator. Why is making a lower low here? Once this happens, guys, all right, the third confirmation that you are going to give to this trade is to look at this area where it hit the impulse. Do you see an entirely supply, or you have demand there? If it is excess supply over demand, then you go for it. What do you mean by excess demand, excess supply over demand? Look at it here, guys. Look at this candle, this green small candle before this big move market this way. Look at the next one. This is the next candle that formed after this big one market this way. This is a supply area, guys. I don't expect this market to go above this level. And what do you see? Boom, to the downside. Do you understand what supply is all about now? Okay, so these are the uses of RSI indicators. I'm going to show you practically on the chart. Now, the second indicator that I normally make use of is what is called stochastic RSI. We call it what? Stochastic RSI, or simply stock RSI. Okay, so this is a stochastic indicator. This is the one that actually measures overbought and oversold. When a market is overbought, it means that it has reset to the top. Okay, and then when it is oversold, it means this one has reset to the bottom. And then the rule of thumb I want to give you here is that never buy. Anytime you are buying a particular asset, all right, and this stochastic RSI is at the top and you are buying, it's most likely that that trade is not going to succeed. Or if it succeeds, you are going to have drawdown, because this RSI, this stochastic RSI, need to reset to the low. in order for you to proceed to the upside. So if you were buying when it was at the top, then you are in trouble. So this stochastic RSI will guide you never to sell where you are supposed to buy, or never to buy where you are supposed to sell. Do you understand now? So, and we are not only using stochastic RSI for that. We're only using it to get divergence. You know, you can use it to get hidden divergence, regular divergence, and so on and so forth. So now, let's now learn how to use both RSI and stochastic RSI to confirm our Elliott wave structure that we learn. Okay, so now when we were studying divergent trading strategy, we mentioned the kind of structure where you can apply divergence. And one of the structure we mentioned was an ending structure, guys. Ending structure. We mentioned ending structure. We also mentioned what is called fake flag confirmation. So we are going to start our reconfirmation of RSI and stock RSI tonight with structure, with what I call fake flag confirmation. Do you see this? This is a fake flag confirmation. You see that we have impulse here. Let me show you guys. You have impulse here, you have impulse here, and you are having all this correction. Even look at it. This correction is already bigger than that impulse. That's to tell you that this is fake. All right, but let's leave that for now. Now you are having lower low here. Let me show you. This is a low. This is a lower low. This is a lower low. Are you seeing it here? Okay. So if you come to RSI, okay, we are going to be using the two together. Can you see? The same thing is applicable to RSI. If you look at it very well, look at the low here, look at the low here. Okay. Look at the low here, look at the low here. Look at the low here, look at the low here. It means you are making a lower low on the RSI, and you are making a lower low on the chart. So this does not show a divergence. Okay, this does not show a divergence. It then means that because this divergence is not there, we are not expecting this move to the upside, guys. We are not going to expect this move to the upside. Now, the question is this: which move are we now expecting, guys? Which move are we now expecting? What we are expecting is simple. We are having this three-wave structure to the downside. Then you are having 1, 2, and 3. After this, we expect this 1, 2, and 3. Remember, when we also did our fake flag confirmation under divergence, go and watch divergence. You understand what I'm saying? We are saying that whenever you see this move to the downside and you are saying that you have convergence instead of divergence, all you need to do is to take a fib of this last push and target 61.8. Look at it, guys. So we are now targeting this level, guys, for this structure to complete. So as soon as the structure is complete there, then what we'll be expecting is a move to the downside to complete this structure. We have a move to the downside this way. All right. So, but immediately this guide come to the upside, immediately it comes to the upside like this. You want to see to ensure that what your stochastic RSI has also reset to the top, like here, like here, like here, like here. If this does not reset to the top here, can you see that it's still at the middle? Why is it at the middle? Because this guy here is also at the middle. You want it to reset to the top. You now see that after it has reset itself to the top, then you have, you know, a regular flat here. So structurally confirm. Then you have supply area here. In terms of supply, confirm. You have convergence here, meaning there is no divergence, meaning this divergence is a situation where indicators and price do not agree in the same direction. If you are making a lower low here indicator is making a higher low. So when you have it like this, there is divergence. So it means that this move to the upside will come. But because indicator is making a lower low and price is making a lower low, it means that there is no divergence. It means that they agree on the direction. And in this case, what is the direction? Bearish move to the downside. Do you understand? But in having a bearish move to the downside, you must have to ensure that this stochastic RSI reset itself to the top. So that means, and look at it, it's just above 50 here. Make sure it reset to the top. And by the time you reset to the top here, structurally confirm, fib wise confirm, RSI below 50, so I'll just come below 50, crash down. All right, and stochastic reset to the top. Then the last thing you are going to confirm is your session. What session are you? Is it a session where there's adequate liquidity to push this market to the downside? Yes, then you get it to the downside. Do you see now? Okay, let's use another example. Another thing you should know when using stochastic and stochastic RSI to confirm structure is this. If you have what is called a zigzag corrective structure, guys, when you have a zigzag corrective structure, impulse 1, 2, and 3. This is zigzag corrective structure. And after this, you have a push to the upside. So this zigzag corrective structure, how I confirm the structure is that both RSI and stochastic RSI will reset to the low. Okay, it's going to reset to the low in an uptrend market. Remember, in an uptrend market, you have an impulse here, okay, and then you have correction in the middle. Correction is going to go A, B, and C. Remember the guideline for the formation of a zigzag. But after this C is formed, guys, you want to look at your stochastic and stochastic RSI. You must see the two reset to the low. The two must reset to the low. Okay, stochastic RSI reset to the low, RSI reset to the low. Once it happens like that, it means that the strength to the upside is not there, but by virtue of RSI, it shows that there is the strength to the upside is not there, but the stochastic has reset itself to the downside, to the low. So as soon as it resets itself to the low, is that you now ask yourself where this zigzag ended. Has it make an equal low in A and C? Have they make equal length rather? Okay, this is A, this is B, this is C. Can you see that this with A here, this with A here, with B here, with C here. This with A and with C, are they of equal size? Yes. If they are equal size, all you need to consider now is trace it to the left. Are you in a purely demand area? Yeah, you don't see a red candle here. So that is a demand area. That was the reason why this market make a move to the upside from here. And look at stochastic and stochastic RSI. Both of them in a zigzag corrective structure must reset themselves to the low for you to say that that structure is complete. Let me bring a horizontal line and put it here, guys. Boom. Can you see? So if you look at this one now, look at the RSI, reset to the low. Look at the stochastic, reset to the low. All right. That signifies end, absolute end, total end to the corrective structure. That's why you have this move to the upside. So by now, you know how to recognize a zigzag corrective structure that I've taught you before, and you know how to confirm that zigzag corrective structure is over and for you to go in. All right. So let's look at another structure. Let's look at another structure and confirm it. Already, I have discussed this with you, how to do a fake flag confirmation. You see, lower low here, lower low, lower low, lower low, lower low, lower low, lower low. This shows that there is selling pressure to the downside. As the price is making lower low here, indicator is also making a lower low, meaning that this upside will not come, even though this one is looking like a correction. And you know, for every impulse, you have a correction. But when you have this kind of scenario, this impulse has come to grab liquidity, and this selling pressure to the downside is there. All you just need to do is to see a correction. All you just need to do is to see this correction. As soon as this correction is over, you look at your stochastic. As it reset to the top, yes, it has reset to the top here. All right, this one is still at the bottom. Take your trade. We are looking forward to all these setups, you know, in the course of the week, guys. So let's see another corrective structure and, you know, how to do their confirmation. Another corrective structure and how to do their confirmation. Okay, remember, guys, that we show clearly that this one, this structure, guys, is you see this wave down, you see this structure A, B, and C. Okay, this is a zigzag corrective structure. Okay, zigzag corrective structure. But then pay attention, because I'm going to be showing you a lot of clue to understanding how to use this indicator to confirm your structure. Do you notice that after this impulse, you have a zigzag corrective structure, and after that you're supposed to have this move to the downside. All right, you're supposed to have this move to the downside, but with the aid of this indicator, I knew that this move to the downside is not going to come, but rather I'm going to target 50 to 61.8 of this impulse. How did I know it? Now listen to me very carefully, guys. I'm going to show you here how to get all this gist. Okay, so if for instance this is a high, if this is a high, of course, not if, this is the high, the completion of this corrective structure is the lower high. Is that correct? If you come to your RSI, this is the high that corresponds to this place. This is the lower high that is here. For this move to the downside to come, we must see the RSI giving us a higher high. Look at it. We must see something like this. Correct. Can you see higher high, lower high? This circle here is lower than this high here. But if I can see on my RSI that this high here is the one that is corresponding to the low here, and the one that is even higher here is at the lower end here. So as this market is making a lower low here, at the completion of this corrective structure, you are having a higher high on the indicator. Oh, that means that even though the market is making a lower high, the indicator is giving me a higher high. That is a better price for me to buy. And as soon as I see this on my RSI, I want to look at a stochastic that reset to the top. I will sell massively to the downside, meaning that this wave is going to come. But watch something, guys. Instead of this RSI making a higher high for me to confirm that this market is giving me a premium price, it gave me a lower high. So meaning that you have a lower high here and you have a lower high here. It then means that this move to the downside is not going to come. I don't have momentum to the downside. That's what it means. That is why I will now say, if that's the case, give me a retracement of this final push impulse. So at 50 to 61.8 here, that's why you have this move to the upside. Is that clear now, guys? If you don't understand, just watch the video again. You will get it properly. Okay? Now, after this move to the upside, okay, you have a three-wave structure. Do you notice that here is a three-wave structure to the upside? Because this one is the same move to the downside. You have 1, 2, and 3, and then this one is corrected in 1, 2, and 3. Can you see? So this is entire wave here. Let me show you real quick, guys. This 1, 2, 3 move to the upside is a wave, just a one wave, and then you have is corrected 1, 2, 3. So you now take a fib of these three waves to the upside. You take the fib. Where is this, guys? This is 50 to 61.8. 50 to 61.8. This is where we are expected to buy another three waves to the upside. Okay, so the question is that how do I now confirm from the indicator that this three wave structure to the downside is complete? Three wave structure to the downside, this one. How do I confirm that it is complete here? That I need to catch all this move. How do I confirm? Remember, this is a zigzag corrective structure. I told you, what did I tell you in a zigzag corrective structure? That is a sharp correction. That the end of the correction, you are going to see stochastic and stochastic RSI, both of them resetting to the low. Can you see this one at this level here, reset to the low? Then this one, what did it do? Reset to the low. Simple. Can you see? That is a confirmation that the structure, the corrective structure is over. And you see another confirmation here. See another confirmation here. Can you see? It's coming down. It's coming down. It's coming down. Do you see this? Break of structure. What did I tell you when I was discussing trend with you? I said the first wave one is the one that break the resistance of the downtrend, the one that break it to the upside. What are you expecting? 1, 2, and 3. How do I confirm that this regular flat? Okay, this is a regular flat based on our lecture on Elliott wave theory. If you have not watched our Elliott wave theory course, before you do this, you have to go and watch it. It's very, very important. Okay, what confirms to me that the correction is over here? Check this place. What do you see here is higher high. Okay, let me clean it. Let me delete and show you properly. You have almost the same level, but on your indicator, what do you have here, guys? Lower low. So even though this one is not giving you a lower low here, but on the indicator is giving you a lower low. So what does it mean? It means that the indicator is saying that the price is giving you a better price by which you can buy. This is what is called bullish hidden divergence. That this one is not giving you a lower low here. It can even give you the equal low or a higher low. But on the indicator, is instead of it to give you a higher low here, it's giving you a lower low. This is hidden bullish divergence, and that is a confirmation to me that this move to the downside is over, and we've got to see this move to the upside. That it confirms to me that this is a regular flat corrective structure. Is that okay, guys? Confirms to me that is a regular flat corrective structure. So let me show you again how I use indicator to confirm structure. Look at another example here. You see a bullish rally to the upside. See this bullish rally to the upside. What do you see here? A flag. Okay, but I've gotten strategy to confirm, a fake flag. This is a fake bullish flag. Can you see? Up, down, up, down, up, up. Can you see? As you can see here, this market is making a lower low. Is that okay? And you come to the indicator, what is it doing? A lower low. Okay? It means that there is no divergence because price is making a lower low and indicator is making a lower low. That means there is convergence, there is agreement of direction between price and indicator. And what is the agreement? As per direction, the momentum is to the downside, because if you look at the position of RSI here, you can see it's below 50. And I told you from the beginning that whenever RSI is below 50, it shows that the momentum is to the downside. And when RSI is above 50, momentum is to the upside. So at this level now, we have concluded that this is a fake flag and the move to the upside is not going to come. Rather, we are going to get a move to the downside. Then how do we trade it? How do we trade it? It's very simple. What we do is to take a fib of this level, this last impulse to the downside, take a fib and target 50 to 61.8. That is the area where you want to take a sell opportunity at this area. And if you look left, you see that this is purely a supply area. From here, you want to take your trade to the downside. Do you now see confirmation? You know, fake flag confirmation, very powerful, guys. So, okay, so that's that. Let's see another confirmation. So what I'm doing for you right here is to spot a corrective structure and show you how to spot the end of that corrective structure with the use of an indicator. You have a 3 waves to the upside, 1, 2, and 3. Then you have 1. This is a what? This is an expanding flat, guys. And you have this move to the upside. You have expanding flat corrective structure. Why is it an expanding flat corrective structure? If you have not watched my course on LA2 theory, go back there so that you can understand. This is wave A, this is wave B. Wave B has crossed the starting point of wave A, and this is wave C. Wave C has crossed the end of wave A. So that qualifies this to be an expanding flat. But if you look at indicator, how do you know that this structure is going to end here? All right, how do you know it's going to end there? It's very simple. All right, very simple, guys. You see this reset? This has reset to the low. This has reset to the low. Okay, and then when you look at this, it has also reset to the low. So at this point, it gains strength. Can you see? Gain strength to the upside. Boom, to the upside. Do you see it now? So let's do another confirmation, guys. Let's do another confirmation. This is a zigzag corrective structure. Okay, you have 1, 2, and 3. After that, you have 1, 2, and 3. So I told you, how do you know that this zigzag corrective structure is over? First, take the fib of the first 3 waves to the upside and check whether this zigzag that is forming has ended at 50 to 61.8. Oh yes, it has ended here. That's number 1. Number 2, you want to find out where it ended. If you look left, does it correspond to demand area? Because you want to buy. Oh yes, it's a purely excess demand level. Excess demand level, guys. Anywhere here we do. All right. Then the next thing is you want to look at the indicator. Since this is zigzag, both must reset to the low. Where is the low here? Look at the low here. Reset here. Reset here. What are you waiting for? Take your trade to the upside. Okay. Let's look at another structure, guys. You see, this is a WXY structure that we are seeing here, guys. This is a WXY structure. Let me show you. This is 1, 2, and 3. This is 1, 2, and 3. This is 1, 2, and 3. This is a WXY structure. Why? After this rally to the upside, you have 3 waves down, which is W, 3 waves up, which is X, and 3 waves down, which is Y. Of course, this is the orthodox bottom. All right, we discussed orthodox bottom in our part 4 of Elliott wave theory course. Refer to that video to understand what we call orthodox top and orthodox bottom. Okay, so now you want to look at something very closely, guys. You want to know whether this move to the upside is going to come. Okay, and how are you going to get this, guys? You want to look at something that is very instructive. Okay, you want to look at this is W, this is X, and this is Y. You want to look at the move between W and X. Okay, this W to the downside, and Y rather, not X, W and Y. You want to look at the move, okay? So if you are looking at the move between W and Y, okay, this way, I want to see lower low. This one you might not take it here because why? It's giving you no divergence to show this upside, but you might not take it here because it's giving you a lower low. This one giving you a lower low. All right, do you understand now? So that's why you must be careful. It's not everything you are going to get rightly. There are some you may not get them rightly, but just follow as we are doing it. All right. So let's look for another one. Okay, let's look at this one. Okay, let's look at this one. Okay, all right, 3 waves down, 3 waves up. Okay, all right. No, I want a perfect example of structure that I taught you, One, two, three. All right, reset to the low. Can you see this is a regular flat, guys? 3 waves up, 1, 2, and 3. Then it moves to the upside. This is a running flat, guys, not a regular flat, because this does not come to the low here. This is higher high here. Okay, higher high, the same high. This is a running flat, guys. So in a running flat, how do you get the structure, guys? How do you get the structure? What you do is simple. Guys. Just come to either the RSI or stochastic, and then try to look at this low here and this low here. Can you see? It's making a lower low here. This low here correspond to this one. This low here correspond to this one. What do you see? It's making a lower low on the indicator, whereas it's making a higher low on the price. So whenever this one happens, just know that the momentum is to the upside because the market has given you a discounted price on your indicator. That is why it's giving you a lower low here. It's telling you that the selling pressure is much at the downside, that the market has reached the bottom. It has reached a discounted price for you to buy. That's the meaning of this push down to the downside. Do you understand? After I now see this move to the upside, let's look at this structure. This Elliott wave structure, 1, 2, and 3. A move to the upside. Now, what type of structure is this? Okay, what type of structure is this? Do you notice that in this structure now, this level broke this level, but this level cannot come to this level. So this becomes a running flat. Guys. A running flat. So how do you confirm a running flat? How do you confirm a running flat? Check this low here. Check this low. As this is making a higher high here on the low to confirm the running flat, do you make a lower low on the indicator? Yes, look at it here, lower low on the indicator. It's a perfect example. This is what is called hidden Bullies divergence. So hidden Bullies divergence has purpose to define the correct structure of a running flat and to give us confirmation that a running flat will not transform to another structure. These indicators have helped us to achieve this doubt. All right, look at another running flat here, guys. Look at another running flat. Okay, do you see that you have wave A, wave B has broken the top of wave A, and wave C cannot get to the bottom. This is a running flat, guys. And in this running flat corrective structure, you want to look at your indicator, this level at indicator and this level. If you trace them, do they make a lower low? Oh yes. Can you see? You see this low, make a lower low, meaning it has given you a discounted price to buy. Boom, to the upside. Is that okay now? Let's look for another structure. And look for another structure. We explain we explain how to use indicator to confirm it. All right, look at it. You are having a zigzag here. Okay, having a zigzag here. Let me show you real quick, guys. You're having a zigzag. Can you see zigzag? Zigzag here. Okay, so this zigzag that you have here, you know, first thing you must do is to measure this length here. Are you up to 50% to 61.8? Yes. Yes, you are. Can you see 50%? So that one is confirmed. The next thing you want to look at is, since this is a zigzag, I told you the rule for the formation of zigzag is that both RSI and stochastic RSI must reset themselves to the low. And what do you see here? RSI reset to the low, stochastic RSI reset to the low. This confirms. Then the next stage is to pull it to the left. Are you in demand area? Oh yes. Look at the powerful candle here that indicates demand, and that candle, that push here, break this structure. For the fact that I broke this structure, it means it's a powerful one. So that's why you see from here, the market make a sharp move to the upside. Is that okay now? Look at another structure, guys. Can you see? Look at another structure, guys. See this 1, 2, and 3. 1. Let me show you how to cut this middle. 1, 2, and 3 running flat, and then boom. Okay. So this one in itself is ABC. This is wave A. This 3 in the middle is wave B here, and then you have wave C here. And so this 3 in the middle is, this one is wave A of it, A prime, B prime, C prime. Can you see? A, B, C is B. This one here is A. This is the completion. This is C. So you now go to your indicator. Do they align to the downside? Yes. Look at it. Align to the downside. Yes. After alignment to the downside, trace it to the left. Do you see bearish candle or bullish candle? Bullish candle. Yes. Demand. All right. Already you have taken the fib 61.8, 50 to 61.8. Yes. So these are the confirmation for the move to the upside. Is that okay now? Okay. So let's look for another structure, guys. Let's look for another structure. Okay. Do you see this? You see this? 1, 1, 2, 3, and 1. What type of flat is this? This is a regular flat. And you know, a regular flat may not even pass 50% retracement. Okay, 50% or even 38 is not allowed. Can you see 50% retracement? The flat is over. All right. And if you check the indicator, okay, you check the indicator at this level, you see a reset to the low. On the part of the stochastic, you have a reset to the low. Can you see a reset to the low? If this were to be a zigzag corrective structure like this, 1, 2, and 3, then we will require stochastic to also reset, RSI to also reset to the low. But in this case, we only require this to reset to the low for us to buy. If you want to put another confirmation, right here, you see this engulfing candlestick pattern. This engulfing candlestick pattern. I was teaching you when I was teaching you corrective structure, flat corrective structure. I also taught what you will see at the end of the flat corrective structure for you to confirm that a move to the upside will resume. One of those things is formation of what? Engulfing. When you see engulfing candle, or you see a railroad track, you know, candlestick pattern. All right, you confirm that this move to the upside is there. But in this case, you also look at stochastic as a reset to the low. So these are some of the confirmation that you give to your structure. All right, these are some of the confirmation you give to your structure that confirm that the market is moving to the upside. For instance, look at this one again. You have a 1, you have a 2, you have a 3. Then you have a 1, you have a 2, you have to a 3 as corrective structure. You have to just pick your fib. Okay, fib this level. Does it get to 50 to 61.8? No, does not get there. Okay, so in this kind of scenario, I wouldn't have taken this trade because it does not get to 50% retracement. Okay, because for me, that is just ideal retracement level that I'm looking for. All right, do we still have other examples? We have plenty examples that you can follow, guys. Can you see this? Look at another example here. You have 1, 2, and 3. Then you have 1, 2, and 3. When you have it this way, first thing you should do is that this wave from here to here, is this 1, 2, 3 down up to 50 to 61.8? Yes. Where is it? Let me give you. Yes. You have it here. Okay. Then what type of corrective structure does it make? What type of corrective structure does it make? This is a flat corrective structure. It's a flat corrective structure. Then you need to look at your stochastic and see when this one finishes here, has this one reset to the low? Yes. You see, reset to the low. When and this one above 50? Yes. So take your trade here. Boom. So can you see how we are using indicator to confirm structure? Now, this is a running flat here, guys. This is a running flat. A, 1, 2, 3, B, and C. This C does not get to this top, and this B broke this A. So this confirms this structure as a running flat. But how will I know that this structure will not come down to form another structure? You have to look at this indicator. Where is it? Reset to the low. So as soon as you have this reset to the low here, okay, and possibly making a lower low. See, can you see? This one is making a higher high here. Watch something, guys. This one is making what? A lower low. The implication of this lower low that is giving you here, which we call a hidden bullish divergence. The implication of this lower low is that it has given you, even though this one has not come to break this low, the market has given you a better discount than it gave you here. That means it cannot give you much discount than this. That's the meaning of this lower low. That's what it means. It's lower than this one, but here is higher than this one, meaning this is the last discount we can give you, irrespective of what you can say. Let's arrive and finish from your mouth. I'm not going to go down more than this. This is the lowest price I will give you. That is the meaning of what this indicator before you is telling you. That's why you have this move to the upside. Is that okay now? One more example, then we are done for the day. One more example, then we are done for the day. All right, look at these guys. Look at 1, 2, and 3. Look at 1, 2, and 3. What do I say you should do? First is to flip this level between here and here. Does the 3 wave pullback get to 50 to 61.8? Oh, yes. Got there, look at it. Between 50 to 61.8. Once you have confirmed that, you pull out your fib. And then another thing is that when the thing terminated at 50 to 61.8, if you trace it to the left, do you see a clearly demand level? Yes, look at these powerful candlesticks. This is imbalance. That's the demand level. Boom. That's why the market got to this level. Boom. To the upside. Do you understand? So apart from the fib level, you want to look at indicator. Do they reset to the low after this one got here? Do you have this reset to the low? Yes. Can you see? And then a move to the upside. Okay. Now, another thing you should learn how to use is this. You see this move? You see this move here? See this move here? Move, correction, move, correction, move. How do you confirm that this corrective structure here is over? How do you confirm? You see this? You see this? trace them to the low. If you trace this to the low, you see it's making it's at the lower side. This one is making a lower low here, okay, here. Then this one is making a higher low. Can you see? Let me use this to draw it properly, guys. Boom. This is what is called hidden bearish divergence. So when you see a move like this, you take a fib from here to here. Can you see? It has hit your 50 to 61.8 correctively. Correctively. Can you see this level? Okay, let's remove it. Correctively. It's not that you have A as impulse or anything. Okay, I always said it. This is the orthodox bottom. You have 1, 1, 2, 3. This is 1, 2, and 3. Grab liquidity here as supply, and then boom to the downside. Can you see now? So how do you use your indicator? This is the swing, and this is another swing. So this is making, this last swing is making a lower low, guys, a lower high. This is high. This high is lower than this high. This is a lower high. But if you come to the RSI indicator, it's actually making a higher high. It means that this market is giving you a premium price to sell. Okay, giving you a premium price to sell. Look at when this price was here. This indicator was down. But even when this price is making a lower high, the indicator is climbing up, meaning that I'm giving you a better price for you to buy this market. That's what it means. Boom, to the downside. So this is how to combine Elliott wave structure together with indicator. Just follow what I've done. Practice, practice, and practice. Keep practicing until you get it perfectly. So I've shown you how to use stock and stochastic RSI to confirm a bullish flag and a bearish flag. I've showed you how to use it to confirm a running flat and to know whether the running flat will transform itself to another structure, or it will continue in a continuation phase. All right, I've also showed you hidden bullish divergence, and so on and so forth, and so on and so forth. So guys, this is what I want to show you in this video. If you have not watched Elliott wave theory course, there is no point watching this video, because you will not understand the structure and as they are unfolding. So you need to first go and watch Elliott wave theory course, part 1, part 2, part 3, part 4. After you are done with part 4, that's when you are qualified to watch this video and understand every detail as I dish them out in the video. All right, so if you have not subscribed to this channel, just consider subscribing to the channel. Share the videos, like the video, and so that YouTube can show it to as many as possible, so that I can benefit many more people. So if you have not subscribed, consider to smash subscription button and press notification bell, so that anytime I upload a video, you will get notification for it. All right, so pass a comment. If there's any part of the video that you don't like, let me know so that I can improve. If there's any part that you like so much, let me know so that I can work more on that area. And if there's any video you want me to make for you to clarify one concept or the other, don't hesitate to let me know. I will definitely help you out. So that's the end of the video, guys. I love you all. Next time we meet. Peace.